Are you in that stage in your trading journey where everything seems to be so complicated? You have learned so much information, but you cannot really apply it to the markets. You wonder when your time to be consistently profitable will come. I'm here to tell you that it's really simple. It's really simple if you follow these 2 steps that I will explain to you in this video. Step number 1 is understanding the strategy, and step number 2 is the secret sauce that will get you consistently profitable. So stick to the end to learn that sauce. If you're new to the channel, subscribe. Let's jump into the video. All right, so this week we are up about 8% in profit, and we are up 8% because we tweaked our strategy to 10x our results, and the results are amazing. So how have we done that? Now, first things first, you need to understand that almost all the strategies out there, there's a very high probability they work. You just have to stick to one particular strategy and let it just be the system that you use to make money. For me, I use the system called the failed breakout. Now, the failed breakout is very easy. Now, imagine you have one candle. One candle gives you very little information, but the most important information that you get from this one candle is what we call the high and the low. So the high and the low is the highest point and the lowest point price has reached in that candle. So the high is above that wick and the low is below that wick. Now, once we know the high and the low, then the next candle will definitely give us a signal. If it's 2 of this, number 1, if the candle breaks out like that and closes above the high of that previous candle, you have a breakout. And if you have a breakout, it shows you that there is a lot of strength in the direction of the breakout. So there's a very high probability that the next candle will continue breaking out and continuing in that direction. So your goal is only to trade this candle. If you can do that, then you are all set. You don't have to complicate everything. Now, if this candle breaks out but closes back inside of the range, then you have what we call a failed breakout. And a failed breakout is a reversal signal. So you know that there's a very high probability price will reverse in the next candle. So your goal is to trade this. Now, for me, I am a failed breakout reversal trader, which means that I wait for the high and the low to be set, and then I wait for my signal, which is the failed breakout, and then I trade the next candle. So if you think about it in terms of days, in terms of the daily candles, this can be Monday, this can be Tuesday, this can be Wednesday. This can be Thursday, Friday, Monday, so long as this candle gives you the high of the week. Now, this is where a lot of traders get confused, because you think that you only trade on Wednesday, Thursday, or Friday. But the market does not know the days of the week. It just knows that if I have this cycle, there's a very high probability we are going in the direction of the cycle. So Monday can give you the high and the low. Tuesday expands the high if it like that. So you can have another day where you have a failed breakout on Wednesday. So it means that you can sell on Thursday. And you can also have a day where we have Monday, Tuesday, Wednesday. Now Wednesday is the high of the week. And then we have Thursday giving us a failed breakout. And once we have that failed breakout, we trade on Friday. So it's a matter of understanding the weekly cycle. Just understand that it's not carved in stone. The high and the low of the week will always be moving up and down throughout the week. Because in definition, the high is the highest point price has reached in that week, and the low is the lowest point price has reached in that week. Simple. Now, let's look at real life examples. All right, so DJ30 on Wednesday gave us a beautiful reversal setup. But we start on Monday. On Monday, price sets the high and the low. High, low. And then on Tuesday, price breaks out and then closes back inside of the range, giving us a failed breakout. And a failed breakout is a sell signal for the next day. And so the next day is when we are looking for that opportunity to sell. Now, in this case, we came to the screen in the New York session. And in the New York session, our timing window is between 9 and 11. So when you come to the screen between 9 and 11, you are guaranteed to have volume in the market. So this line, this blue line, shows you the time at 9. So at 9, this is the high of the week. So you can see the high of the week is set on Tuesday. So my thinking is, first I want to see price clearing liquidity at the high of the week. If you clear liquidity, you have other time frame traders in the market. And this is a guarantee that you have big players in the market. If you get in, there's a high probability price will go to the low of the week or the low of the day. Beautiful. And then I identify my levels. Now, this is where a lot of traders get confused again. When you are identifying your levels, you follow price action from the low of the day. Price went up, went down, went up, went down, went up again, went down. 2 touches, that's a level. Price goes up again, down, up, 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 down. So this is how you actually follow price action. But this is where we got our level. So price touched there once, touched there twice. So the most recent level prior to 9 a.m. was this area here. All right. So my thinking is, if we break below this low, if we break below this level, then we have an entry. But we need first to trigger liquidity. So you can see at 9:30, price goes up, clears liquidity at the high of the week, then breaks out, closes below our level. What else do you think price is going to do? Very simple. Get in at the breakout candle once it closes. Stop loss is above the breakout candle. And then you are targeting a 1 to 5. Simple. And then you let the market do its thing. You have momentum, you have the confluences, and then you set and forget. Point here is to set and forget. Now, let's look at another example. Yesterday on US 100, we got the same pattern occurring. So, if we use the same strategy, we have the high of the week here. So, we have high of the week set on, where is Monday? Here's Monday. Tuesday breaks out. Wednesday gives us a failed breakout, which means we are looking for an opportunity to sell on Thursday. Now, on Thursday, when we come to the screen in the New York session, what we are interested in is price after 9 a.m. All right. So before 9 a.m., the highest point price had reached in that week is here. This is the high of the week at 8:55. So 9 triggers liquidity, and then this is where we have our levels. So we have this one level here. This one is a level here. We have several bounces there. And we also have this level where price was touched once, touched twice, and then we have this level here. So the moment this candle at 9:30 broke out, closed below it, that was our entry, stop loss above the breakout candle. And then you are targeting the low of the day, and you are targeting a 1 to 5. So a 1 to 5, you can exit at a 1 to 3. That is the minimum area where you can exit. So you can see that the low of the day was where 1:3 was. So it made sense to get out at the low of the day with a 1 to 3. So basically, if you stick to this strategy, you see we have, that is +3, we have +5 from the previous trade on US 30. We also got a trade on oil, and we took this trade live on YouTube here, and it gave us a 1:2. It gave us a 1:1. Price cleared liquidity at the high of the week. We also had a sell signal. So we got in here, stop loss above the breakout candle, and then we got out the next day somewhere around there. It was about a 1 to 1. Now, How do you become consistently profitable? This is now the sweet sauce that you've been waiting for. The secret is showing up every single day consistently, because you never know which day is the winner, which day is the loser. But if you show up on all the days, it means that you have a very high probability of catching those big moves, because it's these big moves that actually matter. If you don't catch big moves like this, then you will not be able to cover your losses. So basically, this is exactly how you become consistently profitable. If you would like me to teach you this strategy and work with me one-on-one for the next 90 days, then check out the link in the description. I am looking to work with 5 guys. Spots are limited, so go check it out. And if you got value from today's video, subscribe, and I will see you in the next video. Peace out.